I just completed a video called 3 Stocks I Believe Are Going to Bottom, and I asked for 100 likes. And you know what? You all are amazing. I got over 126 likes in less than 24 hours. And as promised, this video I'll be covering 6 additional stocks that I believe are bottoming right now that you can invest in long term and increase your gains, increase your assets, and of course, build your portfolio and bring financial abundance and prosperity into your family's life. Let's dive into the video right now. Here's what I need you to do in this video. Post 20 comments below and tell me what video you want me to make for you for your trading and education journey. And if I get 20 comments in the next 48 hours, I will make a video called 6 stocks to make sure you do not buy. You ready? Fantastic. Here are actually 8 companies that I believe are beginning to bottom. First and foremost, Meta Platforms, aka Facebook. And it is on my list for a very specific reason. First and foremost, you had a very interesting gap down on earnings. This was a bear gap and go, but we did end up trading into a support level. Very similar candle here on July 1st as we had on July 28th, and very similar candles that followed. All this bear volume here on Meta starting to get squeezed out specifically today. The big price that we need to keep an eye on is the 100 simple on a weekly. Keep in mind that Meta, aka Facebook, is a huge, huge company, and it is down 55%. I could see it getting potentially all the way down to 100, which would be really worst case scenario. That would require us to retest the 100 simple, maybe all the way up to 195, and then roll over. But between now and then, I do think if you're buying some shares, you have the capability, the possibility, and the flexibility of getting into a collar, which is selling calls and buying puts, specifically around 190 to avoid losing massive downside in your shares. What's the next stock that I think is going to bottom? Well, this might create a little controversy. I think it's going to be Plug Power. And earnings are just a few days away. Here's why I'm thinking and choosing Plug. Well, we have 2 reasons. Number one, we are holding very nicely off of the 200 simple moving average on a weekly. Granted, it was at $16, and you'll actually notice that we've had many interactions with that 200, bouncing off of it and making some new highs. Then, if we go into a monthly chart, we will also notice that we're above the 100 and 200 simple on a monthly as well. Those are going to be now acting as good support levels. And you can see that right here, we interacted with the 200 simple on a weekly and the 200 simple on a monthly. That was a fantastic buying spot around $12, which represents $10 per share if anyone was able to participate in that. We do have the 10 and 20 on a monthly chart to battle right now, but the weekly we're about to get above and the daily we're above right now with good volume, a good gap, and that was before earnings. So it's been very interesting to see what happens to Plug. Again, it's not overly pricey right now. I do think the risk reward is pretty nice, especially with having some stop loss and protective puts that you can start purchasing around $12 if we break that support. But most likely, I think we could retest this retest gap, retest to 100, and just slowly peel our way back up into this 100 simple on a weekly chart. That's stock number 2. Stock number 3, I'm sure you've heard me talk about this one a lot. Boston Beer Company, Sam Adams. The reason I'm selecting Sam Adams, well, fundamentally, great company. Love the beer, solid product. It was down about 78%. When I started really advertising this one, talking about it and discussing it, it has gone up 33% since then because I was kind of aggressively accumulating some Sam Adams down here because it seems to me like this is a very nice long-term trend. And if we go to a logarithm chart, you can kind of see this beautiful uptrend on Sam Adams. And specifically, you'll also notice the largest sell-off that we've had since the IPO. IPO sell-off was about 80%. We had this sell-off in 2008. That was about 67%. And we had this sell-off from $1,300 a share into the mid to high 200 to 378% or 1,000 points. Huge sell-off. Well, what we also are doing is interacting with the 100 simple on a monthly chart. You can see how we bounced off in 2008, how we bounced off in 2007, and we're here now again. So if we're looking at this 100 simple on a a monthly chart can still be a good spot to kind of buy and accumulate some Sam Adams. On a weekly chart, got some good volume. Earnings is over. The earnings candle was really nice with this really strong, sizable gap down and immediate fade. And I do think that this is a good stock to start bottoming, to start accumulating, and to slowly start tiptoeing into for sure. Shopify is the next one. So SHOP, this bad boy is back at its COVID lows. And if I take the logarithm chart off for just a second and really scale this thing back down, you'll notice that Shopify has had an abysmal and just absolutely horrific 76% sell-off from its highs as of right now. These COVID lows back in 2020 are the exact same price that we're pausing at. And again, I'm not saying that Shopify has to have a huge move back up to 160 for you to make money. I am saying that they have had a 1-for-10 split. It's much cheaper now at $40 a share, and you are in an accumulation pattern. This is a buy low down here, sell high up here. This is a perfect, beautiful channel, and I think you should play it as such. So if you've bought some shares, buying low and selling high, look to get into some covered calls, get into some callers right now, but keep an eye on this basing pattern. Yes, this is a growth stock. Yes, it is at a low. Yes, it is an accumulation pattern. And yes, you had a very nice hammer here on a weekly chart with lower shadow going below this candle, bouncing off support, and it does look like it's working on slowly recovering. It's going to take a while for Shopify to get back to where it was, but if you are accumulating slowly, I think it's a smart play to do so down here on Shopify. Next, Netflix. I don't think Netflix is going to go away at all. This is a long-term kind of legacy company, and you're looking at the largest sell-off in history. This is the logarithm chart again, and if we're looking at all these sell-offs, you have a big one right here. I mean, this is equivalent to the 2011 where we dropped about 82%. So we went from $680 a share to, again, approximately $150, which was 76%. So we're huge sell-off. I didn't buy as much as I wanted to because I really wanted to get aggressive around the 200 simple on a monthly, as you can kind of see with this log scale. This drop is just so steep, so quick. I mean, unreal. Usually moves like this do create some type of accumulation before we eventually slowly start peeling higher in what's called the slope of hope. If you look at your bills, you'll probably notice that you do pay monthly for a Netflix account, or at least I do. And that being said, you are and have the opportunity to be more than just a consumer. You can be an owner. Now, granted, I wouldn't, if I had to buy 100 shares, I wouldn't buy 100 shares here relative to being down here at 180. So if you can start spreading it out, yes, start trickling in. Beautiful pennant pattern. It can break down. It can break up. You got the 100 simple right here to kind of contend with. They had pretty decent earnings. But long story short, begin to accumulate Netflix if you have a Netflix account and want to own some long term. Next on the list is Target. Target with a pretty nice, robust dip and pullback, 46% in total. And right now you can see this is a monthly chart. You actually do have a good gap on a monthly chart, getting above the high of 2 months retest gap. We did retest and we're slowly peeling higher. Here's the weekly chart. Nice bounce off the 200 simple on a weekly. And here's the daily. So you can see on the daily chart, it does look like an accumulation pattern with a double bottom or triple bottom down here, close with a neckline, retest, and a slow continuation up higher with earnings around the corner. You probably shop at Target. I don't think it's going to go anywhere. This is a dividend style play. Long term, this was a nice healthy dip, and it looks pretty scrumdiddlyumptious. Next is Pinterest. Pinterest having a strong gap on earnings in August. Now, what's really interesting about this is it did happen to be the second day of August, so you didn't get a brand new gap on a monthly chart. But the really intriguing aspect is if you look at a monthly time frame, Pinterest got absolutely squashbuckled. As we sold off here, got the double top, got the retest, just bear month after bear month. All these months in a row of bearishness are eventually and probably going to get a little bit of love as they circulate back higher into that price. Pinterest has been down here before, and what's ironic is this is the exact same price I started accumulating Pinterest back in 2020, early 2020. Got very lucky with the COVID thing, but I was buying 10 to 20 shares a day, just slowly adding in and getting my feet wet on Pinterest. Well, I think we're back, and I can see that we're back at those prices now. You have a pretty solid gap on Pinterest with good earnings above the 100. It's holding up relatively nicely. If we pop into a smaller time frame, 2-hour chart, you'll notice here, let's go look at the extended hours here for just a moment. Good candle, good volume. We made a new high relative to this little spike, this little upper shadow thing here. So maybe a pullback into 21 or 22 is buyable, but overall, I kind of like it. And even if you don't get an absolute banger on Pinterest, if you buy some at 21 and it runs up to 28, that's a 33% win. I'll take a 33% win, and I do like Pinterest down here. 2 more. PayPal. Also with a very similar gap to Pinterest, gapping up on earnings. I do not think that PayPal is going away, ladies and gentlemen. Personally, this actually broke the COVID lows, and this is when everyone started really, really panicking and getting terrified down here when it made a new low at 67.58. I say new low meaning relative to all of these candles over here. We made a new low on this week. I have been accumulating PayPal. I don't think that this is going to go away. I use PayPal and Venmo on a weekly basis, and PayPal owns Venmo. A lot of data, a lot of finance. I don't think finance is going to go away. I don't think transfer of money is going to go away. And I really like this gap on earnings. It shows some strength. I think we can pull back down maybe a little bit since it is a retest gap and then slowly go higher. But again, PayPal would be more of an accumulation style where you're buying some shares on down days. You're slowly digging in. You're building a position. But in general, it does look pretty cute. And last but not least is Square, ticker symbol SQ. I've been buying about 3 to 4 shares of Square on down days. I bought 4 more shares of Square over here. So as of right now, I have 240 shares of Square with a dollar cost average of about 118 because I've been accumulating for a while. And I did sell a covered call today on Square at 140 for October. Only got 83 cents for it, but I figured, you know what? Why not? Right? Why not? Because if I get called away up there, I'll actually be profitable. 83 cents on, I'd only be getting called away on 200 shares. So they're going to have 240. And anyway, that's pretty much the bottom line. So you have the 100 that could act as a resistance. You have the 200 here on a daily chart. You also have the 200 on a weekly chart that would act as a little bit of a resistance. And again, at this stage, if I get called away on those 200 shares, I would be mostly a little profitable overall. And then I'd be able to take those gains and then just kind of repurchase and, maybe sell a put and get back in at that stage. Of course, we'll see, but this is October. It's forever away. And I know earnings is around the corner, so I'm trying to take advantage of the volatility. My thoughts is with PayPal gapping up, Pinterest gapping up, Square will probably gap up a little bit and then kind of fade down or open flat. I'll be able to buy back this covered call, give it 2 or 3 more weeks, see if we can break above the 100, and then eventually sell another option and slowly start whittling away my dollar cost average. I made $160 from this covered call, so I can take that money and buy 2 more shares, after earnings. We'll see what that does on earnings, and that's kind of my plan. So we'll find out what happens. We'll give it some time, but overall, those are 8 stocks, ladies and gentlemen, that I think are working on bottom. I hope you enjoyed this video. If you did, throw in the like, thumbs up, little icon there because real life trading loves enriching lives. And make sure you throw in your comment on what video I can bring to you so that I can make you additional videos to enrich your life and help you trade more profitably every single month. I'm out. You guys rock. Bye.